Afternoon and happy Thursday, everyone. This is Scott Wohlers with River Place Capital. It is Thursday, April the 1st, and wanted to just discuss what happened in markets last week and something that really interesting happened in markets last week with Archegos Family Office and the disruption that it caused into the marketplace. Wanted to touch base on what happened there, kind of explain what happened and the impact that it had on the market. And as we are talking right now, we have the S&P 500 at all-time highs, and for the first time ever, above $4,000 on the index, above 4,000 for the first time ever. And it's a big day for the markets as we've seen the S&P march higher, as we've seen it this week. And so we finished the week last week up big on the S&P 500, up 1.6%, which is a great strong week in the S&P 500. However, we did see the Russell or the small cap stocks, the Russell 2000 and the S&P 600, which are your small cap stocks, which have really been leading the market higher this year. We did see those pull back last week. And that's kind of set up to where we're going and going to talk about what's happened this week as we've started to see what we like to call a counter trend rally in the market. So what we have seen over the last couple of months is you've seen these large cap tech names and these high PE tech stocks being sold off to buy your more cyclical names, your industrials, your financials, your banks, your material sector. So some of your more cyclical oriented sectors that do well in booming economies, those have been the ones that are being bought at the behest of the large cap tech names. But what we've seen in the market the last 2 days is we've seen a tepid 10-year treasury yield, and we've seen money starting to pour back into those tech names that have been sold off and those high PE names that have been sold off to buy your lower PE, more cyclical oriented stocks. So the last 2 days, we've seen a nice counter trend rally where you're seeing some tech stocks be the leadership. Now, we don't believe that this is going to be the case for the remainder of the year. It's just a counter trend rally where investors have said, okay, these PEs have come down to a reasonable valuation where I still believe, they can catch up with their growth now. So this is a buying opportunity. So I'm just going to buy in here and hold to see how they go as we start to head into Q2, as we just wrapped up Q1 yesterday, and get into earnings season for the second quarter to really dive in and see how these stocks are doing. Another key important news is President Biden unveiled his over $2 trillion infrastructure plan, which is another thing that would benefit your more cyclically oriented names, your industrials, your materials, as we need those industrials and those materials to produce the goods to improve our infrastructure. So that is set up in the marketplace as well. And so really interesting, last Friday, we saw Viacom CBS after the day before it had a big sell-off, and then all of a sudden we saw it have another big sell-off, which is very uncommon in the marketplace. And over the weekend, it was unwound that Archegos Family Office, which is a family office, which is set up for individuals who are high net worth individuals, and they can run their investments like a hedge fund. And so the Archegos Family Office was incredibly levered, meaning they had borrowed a lot of money to buy stocks, but they didn't diversify their positions when they were borrowing this money. They were very, very concentrated in a select few names. And at some places, they were levered up to 18 times leverage. And so what happens is, as you have your pledged assets, which are your stocks that you're borrowing against, well, when they're going up in value, everything's okay because you're increasing your margins there and you're showing profitability. You can cover and service the debt where your asset is worth more than what you are owing. However, what happened is, as one of these positions happened to be Viacom CBS was selling off, the banks called and said, oh my goodness, you have dropped below your value level where your assets are no longer worth more than what you owe. So they do what's called a margin call. And that's where the banks will call and say, we want our money back for what we've lent out. And what happens then, and sometimes, is if your assets are worth less than what you owe, then you have to sell other positions as well. And so the moral of the story here is making sure that you personally are never too levered in the marketplace where you're not betting or borrowing too much money to buy positions, and then you're not solely focused in and not diversified. This is a prime example of the reason why you need a diversified portfolio, is because you don't want to live by a few and die by a few. You want to have a range that can help pick up when others are down, so you are more balanced. And so that's what we always recommend at River Place Capital. So if you have questions about what's going on with Archaeos Capital or your individual portfolio, if you're diversified enough or not, feel free to give us a call. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. Have a wonderful day, everyone.